Howdy, and welcome back to You've Got People Problems, the podcast where we tackle the leadership challenges that no one wants to talk about, but every business faces. I'm your host, Mel Ortiz with Activate Human Capital Group. Today's conversation is with John Marshall of Series Next Solutions. You'll hear more about his background as we get into the episode, but what stands out most is how clearly he breaks down the hierarchy of finance needs inside a growing business and where people problems show up at every level of that structure. In this conversation, we talk about the three core financial roles every growing business needs and how they build on each other. Why asking the wrong person to do the wrong type of financial work creates frustration and misalignment, and how gaps in execution, role clarity, and decision-making often show up as financial problems. So let's get to it. Howdy, y'all, and welcome to You've Got People Problems. Our episode today is featuring a friend and colleague, John Marshall with Series Next Solutions. So, John, thank you for being here with us. Tell us a little bit about what y'all do at Series Next, and then we will jump into our topic, which is the hierarchy of finance needs and how people, and probably people problems, fit into that framework. So, take it away, sir.
Yeah, thanks. I'm glad to be here. So a little bit about Series Next. We like to say we give people future financial clarity so that they can make more confident business decisions. The way we do that is we operate finance and accounting functions for $2 to $15 million revenue businesses, whatever that looks like. And a lot of what we're going to talk about today is the roles that that function comprises. We happen to put three human beings into our clients to comprise those three roles. I don't want to give it all away.
Yeah. Okay. Well, can we just pause on future financial clarity? Because the market sector you serve does not have enough of that. So I'd like to start there and jump in. If you are listening because you know John and you don't know me, my name is Mel Ortiz, and I love the what makes people tick space. How do we get the most value out of them? How do we help them thrive in clear roles that they know how to win in? How do we make sure they're in the right seats? How do we make sure they're engaged and they stay? So I use predictive index, a process called role review, and employee engagement are really the three tools that I'm putting into place for clients of mine. And you get it wrong in the finance seats, wow, really bad things can happen. So I was really looking forward to this conversation. So you said there are three roles that your team typically puts three different individuals in. Tell us about those critical roles, whether we staff those in-house or we have a partner like Series Next. Tell me about that hierarchy.
So it actually starts at the bottom, not the top, because if you think about your own business and as you grow, you probably start by having a bookkeeper on staff, and we work our way up from there. So the three roles that we put in are, we simply call accountant, which is more like a full charge bookkeeper, if you've ever heard that term, which is essentially the person who's going to get all the numbers on the page for you. So if you're in QuickBooks, like a lot of companies, they're kind of getting through your bank feeds and credit card statements and things like that. But they also can do what's called accounting operations, is that's what we call it, payroll, payables, receivables, things like that, and provide some oversight so that their ultimate goal of this accountant person is to give accurate and consistent records every month, right? So we are going to do, I'm going to use a big word, depreciation. It's going to be this way, and it's going to be this way every month. And that's about all you need to know about it today. The second role is what we call financial analyst. The financial analyst is all about getting numbers, sometimes backwards looking, sometimes forward looking. We really want leading indicators, but all those numbers that go through your organization beyond the financial statements that help people know if they're winning. And then that person is also working with connecting those numbers back up to, the P&L, right? Or the whole point is to make a profit and do better financially. So that person is kind of managing, that whole world, building projections, building reports that come out of a system and moving around, all that stuff. And then there's the CFO who sits on top of all of that. The CFO's job, in three words, is future financial clarity. So all of those things happening underneath the CFO make that CFO's job easier. They give the CFO the information they need and give the rest of the organization the information they need, not only to chart a path, but also measure themselves against the path that they've chosen. The CFO works a lot more in the chart the path side, so that you don't do something like decide we're going to grow by so much that we make ourselves bankrupt accidentally. Um,
Whoops. That
yeah,
never happens.
it happens. Um, we could get into more details of that further down the line, but really, those are the three, the three seats within the seat, if you will.
And are there trigger points where like if I get to a certain level of transactions or revenue that I really need just a bookkeeper, then I need to add on an analyst and then I need a CFO, or do they really come most valuably as a package deal that we're doing all those pieces at once so that we're staying ahead of ourselves? Tell me how people come to you, why they start where they start. Give me a
Sure.
little bit of that intake path so people can
So
help.
a lot of it has to do with wanting to get forward looking, right? I've got a bookkeeper, my business is growing. Now I've got something more to lose. I'm trying to make sure I plan this thing now so that I don't, you know, run this thing into a ditch. And already growing is the really critical piece for needing something like what we do. Um, the reason people would come to us for that is because earlier on, let's say the $2 to $5 million range for an average business, you really only need pieces of those three people. And so sometimes people will come to us after they've asked a bookkeeper to do a forward-looking forecast, for example. And most bookkeepers don't want to do it, and don't carry the mindset to do it. And I don't mean that judgmentally. I mean there's we were just talking about this. There's different parts of your brain that do these things, looking
Yes.
backwards and kind
Yes.
of finding the numbers on the page and getting them in the right place, solving the riddle, and looking forwards and kind of making it up, but having a good reason why you're going to do it. Um,
Can we pause there for a second? Because I see this so often with clients as they're looking to fill these seats. And we're trying to scope out who's the ideal candidate for this bookkeeper seat, say.
mm,
And this person, by nature, if we get the right butt in that seat, should be very process oriented. They love the satisfaction that comes with a reconciliation when all the pieces match up. They like the consistency. What they don't like is guessing. There isn't a lot of guessing in bookkeeping. And so when you ask that person with that perfect talent set to go make some guesses about the future, they get very uncomfortable very quickly because that is not who they are. That's not what they have to offer. And they sure hate being wrong. And so everything you're asking them to do is running counter to their talent set. And so they, a lot of times, will feel like they're being set up to fail. And like there's this test that they're not going to pass. And everyone wants to know how to win at work. And if their winning is guessing, I can like see them bristling in my mind right now, going,
yeah.
"Oh, you want me to do what?"
Imagine the anxiety you're introducing to that role
Yeah.
at
So
that
yes,
point.
I viscerally can see this from a talent set.
Yeah. And so bookkeepers, we'll say are like fundamentally required. So we talked at the outset about introducing this hierarchy of finance needs. The very base of that hierarchy is, bookkeeping happens basically because it's the foundation of your business. It is the ultimate financial measurement of what you do. And you need somebody in that seat who understands the fundamentals of accounting, what a debit and a credit is. You don't have to understand it. You just
So
need them
pause
to
there
get the
for a
numbers
moment.
in the right
You
spot.
recommend not having my sister-in-law, my niece, my friend's brother who kind of does this for a couple people. I so often see this as people
Yeah.
get started. They just want someone they can trust, which I think, I don't know, there's got to be some stat around how much of the embezzlement in this country happens by somebody you trust. Um, but also how much of the financial management is happening just by somebody close to you that may or may not have that skill set. And so I suspect often when people come to you, it's like, I'm now acknowledging this probably wasn't my best move, but I didn't have bandwidth to do it and I need help.
Yeah. That so I will cut people some slack, right when you're getting started. And what you're really doing is you need somebody to use QuickBooks to invoice your customers and just, put it somewhere. Because in that space, like all you're really doing with your company is managing things out of the bank account anyway.
Yeah.
And then maybe by the end of the year, you go to your CPA and pick up the pieces. That that is totally a thing that can happen. But as you start thinking about, really needing to make decisions about growing your business, am I going to hire somebody to do these things? It's time to start having a fundamental understanding of what that looks like. And
Okay.
that's where, even if you've still got, your brother or whomever doing that accounting operations piece that I talked about, getting somebody who knows what they're doing in to keep your books is a good idea. And a lot of people race to the bottom on that, and they find the person who's like, I'll just charge you $150 a month. Um, they're they're worth more than that.
Okay.
So,
It's almost like a backstop, right? Somebody who's making sure these things are right.
yeah, yeah, and a step on the path, because what you want to be able to start doing is being able to use your financial statements to understand your business better. And you don't have to be an accounting major or an MBA to do that. But as you start walking up that path, um, you know, you want to think fundamentally about, like, what does another dollar of revenue really get me? How many cents on the dollar of costs am I going to incur to get there, so that my next $1,000, what do I keep? You get to a point in your business where that really matters to you, right? We're small business owners. That's the real mission of Series Next Solutions, is that small business owner understanding that if we can help them, a $2 to $5 million revenue business go from a $150,000 profit to a $300,000 profit, that can be life-changing money for a small business owner. So it's important to be able to start getting those fundamentals. What is payroll? How much do I need to earn to be able to hire that next person who's going to take me out of a seat and let me focus on something? You have to have good numbers on the page that you can trust, to be able to start seeing that and think through that.
Okay. So where does the analyst come in? We've got the books in place.
Yeah.
We've got you're calling accounting operations. What's that analyst role? What are the people problems we often see if it's handled in-house at a company that doesn't really need it yet? Give me some context for that.
If you know, I don't often see it in-house somewhere where they don't need it yet, but I'm gonna take a crack at it. So with that, first of all, that role itself, it comes along a little bit later, because when you think about an analyst, you're really thinking about starting to plan your business, not just for yourself, but for people around you. Because now we're going to start working in, a document, probably like a financial projection, that says, here's where we're going to go, and these are the amount of widgets we're going to produce, and here's who we're going to hire when, as we, make more widgets and sell more widgets. And so those become things that, like, a business owner just isn't, if it gets beyond thinking through it intuitively.
Yeah, I was going to say
Or
that seems like a founder seat thing that mostly happens
Yeah,
just in the background as we're processing. Maybe we have an Excel spreadsheet where we're budgeting and
yeah.
figuring
So,
things.
it's that, or if you have, you've got a staff now, and we're trying to now measure, staff, as opposed to make decisions out of the bank account. This person is in this territory now, and they need 8 new clients a month, and that's a target we're going to pick for them. Who's getting that out? Um, we'll put a pin in that for AI, but ask me again in 6 months. But those are the numbers that an analyst is going to start running. Areas where I would think you would see, analyst, is maybe a professional services company where the financial side itself isn't super complicated, but you need somebody helping to move the numbers through the organization, especially if you're implementing an operating system like EOS, Bloom, scaling up,
Okay.
things like that, where they're asking you to build scorecards and they're asking you to predict things quarterly. And
Got
you don't want to go and coming up a quarterly and say, we're going to do 5 million next quarter, and we're going to sell 18 of these things. And you sell 18 of these things, but you do 4 million because nobody did the math for you.
Yeah.
Um, that's, those are good landing spots for heavier analyst focus necessarily than CFO.
Okay.
Yeah. And so the analyst is actually walking you up that hierarchy. So to recap, we're at bookkeeping gets done first. And then we haven't really talked much about the accounting leadership side, but getting to those accurate and consistent financials. So starting to talk about some of that with, you know, what is my payroll every month? That's there. And then the analyst is now, what are my operational terms that I can be talking about finance, but not talking about finance in, right? So
Tell
they're
me what
pushing
that
it
means.
through. It's like, hey, you know, if we're talking about a retention rate of this and 8 new customers in this territory, it's awesome. Finances will flow from there because
Okay,
somebody's figured out the recipe. That's that piece as you're growing.
got it. It's the recipe that keeps us safe from ourselves as we try to grow, and then we find something that works and we do it so much that it stops actually being profitable, or we pursue the Dell model unconsciously where we sell it at a loss and make it up on volume.
Yeah. Um, we definitely don't want to do that.
Okay. So, what else about the analyst role do we need to know before we think about the CFO role?
Um, I mean, that person really becomes the, when I think about the positions on the football field, they're kind of the diva because they feel like they're the ones that are like the wide receiver that's scoring all the touchdowns, even though there's 11 other people doing things. Um, they are
Because they're
they are the
assimilating all the data?
COO's best friend,
Okay.
right? Because the COO is going, I need this person measured this way, and the analyst is going, well, it's this many of these in the projections that we've got. Let me start flowing that information for you. Let me figure out how to get that going.
So, I'm hearing they're a good thought partner, they're a good measurement partner, and they're our kind of our scorekeeper to tell us if we're on track or off track.
The ultimate spreadsheet jockey.
Okay. All right. I can buy that. When do I get into a territory where I really need a fractional CFO? I don't need a full-time person, but
Yeah, so I think it's probably somewhere in the $2 million to $5 million range, depending on how you handle it and what industry you're in. That's revenue.
okay.
There's certainly something to be said for getting some help before that. It probably looks like a lighter version of it, where maybe you just have a single human advising you a little bit from time to time, or maybe somebody comes in and helps you build a projection for your business that you can then take and use for a while to get to the next ledge. Um,
Okay.
but by the time you're moving into that two up towards $5 million range, that's a good time to start getting some support. Um, it's revenue is the easier thing to say, right? It's not necessarily about revenue; it's about the complexity of the business and what your goals
Sure.
are. Um, are you growing already? So this is a really important thing. We have learned along the way that we can't really help companies if there's nobody in charge of execution and no one's getting traction yet. So the do not time for fractional CFO is when your business is in the dumps and you can't figure out how to get out. You might need someone to come in and help you a little bit on the finance side, but usually if you are having financial problems, you've got an execution issue, and you really need to push your investment dollars towards operations, sales, whatever it is, because finance
Seeing
and a
those problems.
CFO is not going to grow your business, but they are going to help you grow your business more sustainably and faster.
Okay.
So if you're feeling those things, right, it's starting to spin out of control a little bit. I can't keep my hands on everything and understand everything that's going on anymore. Um,
It's a
Now
little
I'm a
bit
CFO
counterintuitive,
with
John.
experience. What's that?
It's almost a little counterintuitive. Like when it's about the money, when we are having financial
Yeah,
issues, it's not the CFO you need. It's someone to help you generate more revenue and more profitability out of the revenue you're already getting.
it is so much so that it actually took me a couple of years to figure that out in business. Where we came and I started this thing. We do what we do, but there's the mission side and kind of why we're all here is to help small business owners. And when they come to you and they're like, I don't know, doesn't look like it's working anymore. Can you help me? Like, I want the answer to be yes. Um, but the answer isn't go pay Series Next Solutions every month at that point, the answer is identify the root issue, which is
Yeah.
something before the money, and go fix
I'll give you
that.
an example. I feel like so often what I see is it's owners who know they've got a right person, right seat issue and they can't bear to deal with it. It's a brother-in-law. It's a person who's been with them for 15 years and they just can't bear to let them go. Um, and that sometimes, but that person's not getting the job done. But meanwhile, all of this expense is tied to that person's seat, their
Mhm.
compensation, benefits, etc. And sometimes it's a people issue that's in the
In
way.
the operation seat. Oh yeah.
In any seat, it might be a sales seat. I've seen that. That's really stalled companies out, and it might be operations. Those are the two most likely examples.
Yeah. I mean, those are, we figured out along the way, like you need to solve those to create the problems that finance and accounting, that real seat solves. And so everything we talk about with like, let's move up this hierarchy of building this seat is really
Yeah.
about supporting and sustaining the growth that you've generated by doing well in sales and solving some of those problems that sales is creating. Um, I once saw a visionary and integrator at an EOS thing stand up one time and introduce themselves. And the visionary got up and he said, I'm the CEO of the company. I do this. I run this, sales group. We've grown from this, whatever. And he sits down and the integrator gets up and he says, I solve all the problems he creates.
And end of roll. Let me bring up another people issue that I see that I'm curious if you see when you're dealing with clients is too often I see those visionaries, those CEOs who are way too involved in the running of the business and in like scheduling and responding to emails. The amount of my clients who I start with who don't have even a fractional admin, it boggles my mind because the value of their time is so high, but they're
Mhm.
doing what is it in buy back your time? Don't do $25 an hour work. Like even just deleting your junk mail is a huge waste of your time. But finding someone to help you get your email under control, like my admin, Danny Lynn, her critical metric is 30. If my inbox is over 30, it means I feel like things are getting out of control. I'm missing things because everything in my inbox is a to do that I have to get to done. And I, I've had an admin for so long, to have to go back to that would be brutal. And I see clients all the time who are like, I'm running a $50 million company and I don't have an admin. Oh, hold please.
Yeah. Yeah. It's a lot just to schedule and sort, huh?
It is. It is. And if that's what you're spending your time doing, when are you doing anything that adds value to the business? And so that's one I always harp on. And I don't know, do you see that too?
Still sometimes
Yeah.
with groups, and we'll press them a little bit on that. That's a hard decision to make if you're cash flow negative, right? Because it's a bit of a leap of faith.
Yeah.
And so if I just spent 5 minutes talking about how basically if you're cash flow negative, you shouldn't hire us yet. Um, but we've been there, and uh, it helps to have a little bit of future financial clarity to see, right? If I bring somebody like that on, this is the thing I need to do to make it return,
Worthwhile.
right?
Okay.
So it's this many thousands of dollars, but we have to compare it to gross margin, not revenue.
Right. Which is the
What does
trap we
another
often
dollar
get
of
into.
revenue get me? Um, that can help, right? And that's what we talk when we talk about future financial clarity. It's on things like that, like a little decision where maybe you just need to be on the phone with your CFO and saying, "Hey, I was thinking about doing this thing," and have your CFO be like, "Yeah, it'll cost you two clients." Be like, "Oh, I'm getting five new clients a week." Yeah,
Excellent.
yeah, that would be
Yeah.
tremendous, by the way.
They could put it in math terms that we understand.
Yeah, in your
Average
operational
client is
terms,
this,
right?
and this is how many of those you need to make this work. Okay.
Yeah.
Okay. I like that. As you think about that hierarchy, what people problems get in the way of your team's success? If you think about clients getting the most value out of a partnership like Series Next.
Well, so I mentioned the COO support. that is a hugely critical thing, because we're dumping in with financial analysts, CFO, and accountant this information to the organization, planning, um, and then measuring against it that they need to be able to use to execute, because we can't execute. Like, if we're just sitting here going, hey, you still need this many widget sales for the rest of the quarter. It used to be that many, but now it's this many because you're behind. Like, that's cool, but somebody's got to do something about it. Um, the other piece is like just like digging in with the CEO, getting them to let go of the vine a little bit. Man, that's several EOS terms on one
Yeah, you're
recording
doing
today.
great.
Uh, but when you work with an outside company, um, they're almost surely bringing their own process, unless it is one of the, I'll call them CFO brokerage houses, where some of the larger companies that are going to just put in CFO, in which case you're looking for specific experience with somebody and fit.
Okay.
But if you're doing somebody who's a little bit more full service for us, that's aimed at maybe a little bit smaller companies, they're going to be bringing their own process on things and maybe a different way of looking at things. So there's a little bit of need for open-mindedness there. It goes both ways, but of course, I'm only going to ask for it on this session from the other side. But it is true, right? You're trying to merge yourself with an outside organization that needs to learn your company and how your company works, which is going to be unique. You're a snowflake. Sure,
Yes.
we might know your industry. We might have been there, done that before, but they're just, there's humans involved. Um, there's your own processes and your own company's history and your own no-go zones, because you ran a business with your brother once and it didn't work, or somebody stole from you, that we all have to work around. So that's a piece of it. Um, I thought I had a third, but it's not coming out. But maybe if
Okay.
I just started talking about it, it would come out. You do that sometimes.
Yes. There's the
Um,
talk to think people and the think to talk people. Just
mhm.
important to know which one you are. So, yeah, it's tell me some as you think about clients you've worked with in the past, where are some of if we think about people problems, where are some of the blind spots you see, some places we go off the rails, either before we've started working with a partner like Series Next or while we're in partnership? What
Hmm.
are some of the messy people things that get in the way?
Two immediate things come to mind.
Yeah.
Um, One is, it's going to be so academic, skipping on the hierarchy. Like,
Okay.
if you have a bookkeeper and then you just hire a fractional CFO, there's a lot of stuff that happens in between those two that might need to be solved. And so you bring a CFO who will do their best, but they might not have the best data for you. Um,
Or do you end up paying
because
them more to do that role?
Yeah, so your financial statements might not really give them the information that they need to look at your company in the right way. You might not have software. It happens all the time. Companies with inventory that like manufacture little things. How much inventory we have? What is our cost of goods sold last month? There's ways to estimate it, but there are companies we go into. We're like, well, we're just going to look at your last 11 months and call it a percentage, because then the stuff happening on the sides is smaller relatively. Um, so,
Okay.
so that's a piece where, as you move up, you're kind of building your company's data set of how you're doing things. Um, that's an accounting thing. That could be an analyst thing too. So your CFO may not come in to do that. They may not like. We have a lot of CFOs who come in and they're like, "You want me to do what with your financial statements?" I don't do financial statements. I just look at them. And that's actually, like, in a lot of cases, totally valid. It's just what is their experience at? Where have they come from? And what are they best at? So, that's one piece. And I think the other piece is understanding responsiveness. um, and the depth of a fractional relationship versus a part-time or full-time relationship. Because those are fundamentally two different things, right? If you have a full-time person, even a part-time person, even if you know where they're working, right? You pick up the phone, you call them, and they're on right away. Fractional might be on with a different group, right? It might be for 2 days. They may not touch your account every day in what they're doing. And so going in eyes wide open about that and helping manage that, um, that is certainly a place, where things can go wrong. And so if you're going to go work with a fractional group, you can expect things to try to work on cycles more often, right? And that's 100% what we do at Serious Next Solutions. One of our core values is build the machine, and the goal with our client relationships and everything we do for the clients is to create expectations of what's going to happen when, define things like, hey, if we get asked for this thing and then the next month we get asked for that thing again, let's go build something that just delivers that thing every month on the 15th.
Yeah.
Things like that. Because when you pick up the phone or you email somebody, the responsiveness isn't going to be the same as when you're the CEO and you call your in-house CFO with a question.
Right. Right. I've seen that work really well with fractionals where we figure out exactly what's needed, or at least get to 90%. And we just set up the cadence where we know, like every 2 weeks, we're on talking about this. And this is the report I'm going to get once a week. And we just get ahead of it. Like you're saying, we build the machine, we build the process to where we know what works. And then we get ahead of it rather than always being reactive to what's happening. Will there still be reactive things that come up? Absolutely. But
That's also another good reason why having somebody in charge of execution is really helpful, because those COO types love processes, right? They love certainty and cadences. Whereas, people like me
squirrel.
are like, right, yeah, I know. I'm sorry, I was 30 minutes late for this call. I looked at my calendar this morning and it was just in my mind that it was at, 3, and it's 3:30 now because I read my calendar wrong.
Yeah.
But that's fine. We'll just all say 30 minutes later, right? No.
It'll be fine. Oh, wait, we do have hard stops. It's amazing. So let's transition to, let's look in the rearview mirror for your team and think about some of the wins. When you think about your client success stories, what are some of the stories that you're most proud of?
I can think of, a couple ones. Actually, even one that comes to mind where the client didn't succeed, but we were there in a big way. We showed up for them, and I felt good about that. But it's the clients who come to us and they're like, we've been there before. We're in a valley. We think we're coming out of it. We're ready. Can you help us pull it all together? And it's exactly, I've been thinking of just one in particular that's been with us for many years at this point, where it's exactly what we just talked about. We built the machine and started going. And another one of our core values is iterate for results. Those two things can kind of work against each other or with each other. But if you look at, we call it the pulse document that we produce for our customers. It's like a monthly thing where we sit down and we talk through 80% forward looking, 20% backward looking, the evolution of their pulse document. It's never done. It's the same way every month, but it's never done.
Yeah.
You're always adding things, and there's like almost twice the numbers on it that there used to be, because we're just cadenced on some of them as they've grown and doubled in size. And now they're talking about new and different things and more strategic things in terms of financing. And when I say more strategic things, I mean, essentially, how are we going to structure our balance sheet? Right? They're like, do we need to go get some debt? Do we need to talk to a banker? How do we handle covenants? Things like that. That's strategic. That is the top of the pyramid, strategic finance.
Yes.
But being able to watch business owners go from, it's been really stressful, we're bumping along, and knowing that there's life behind that, right? There's maybe kids and tuition, bills.
There are kitchen table conversations that go like this. Should I go get a job? I think I need to go get a job. This isn't working.
Yeah.
And there's nothing more
Right.
upsetting than I call entrepreneurship self-induced manic depression, because it really is. The highs are highs, the lows are low. It's scary. And those conversations being able to change to, okay, what are we going to pursue? We've got some cash in the bank. Where can we invest it? Is
Hmm.
just a game changer. There's one that comes to mind. You and I had coffee at this charming little place in New Orleans a couple months
Oh yeah.
ago, and you were talking about a client with an opportunity to get into a big box retail and planning ahead for how are we going to absorb this growth and not let it bankrupt us
Yeah.
because the opportunity is huge, but also we've got to have the right structure, the right cost structure, the ability to negotiate it right. Talk to us a little bit about that because I feel like that's a,
Yeah.
a game changing opportunity that if we pursue it wrong as entrepreneurs, it could have.
Hyper growth is definitely a spot where, okay, now let's talk about CFO type expertise
Yeah,
because you get into things like the working capital trap, where, I mean, there could be two sides to it. One is, right, you get the giant order that's going to 5x your business or 2x your business or whatever it is. And it's the classic case of, well, we had to buy the stuff and then make the stuff and then deliver the stuff. And then they had receivables terms. And then they paid 30 days late. And so we didn't get any money until several months after we bought the stuff. We're out of money before we even deliver, right? So working through with that, the CFO, people kind of nod and intuitively understand, oh, okay, so there's an analytical piece of figuring out I need to go get a loan. Well, yes. But there's also the piece of being able to speak the banker's language, having experience with different methods of financing, understanding, SBA versus non-SBA and who's going to do what. So that's, one big point of value where at that point you want to be able to work with somebody who can talk to the bank and say, this is truly how much cash we're going to need for this. Here's how it's modeled out, maybe even week by week, right, as we grow. The second piece is what happens after. So let's say you have, a huge thing come in, a big new relationship. Uh, you've got to figure out, am I going to manufacture this myself? If I do a contract deal with someone else, if I go finance and purchase a bunch of new equipment to do this thing and we make money off the thing, hey, that's great. Um, but now you still have a bigger operation that you have to pay for, right? If you just leave that piece of equipment idle, you still got to pay the loan, right? You say, oh, depreciation, but depreciation's free because it's not cash. The loan payment's not free. So you have to now make sure you're sustaining your business at a higher level if you're going to go do that. So what's happening behind that? How are we planning for that? How confident are we that we can do that versus maybe going and talking to, like a competitor or a different state or something like that. Or just somebody who's in whatever it is that can help you do it for you, and maybe the margins are lower, but the risk is lower.
sure.
So that's, yeah, those are big scary things, right? That can really be game changing for your company. But you want to tread with some expertise when that happens.
And all of this I'm hearing as I think about wrapping up this conversation, I'm thinking about an ounce of prevention is worth a pound of cure. If I had a relationship and I have these building blocks in place, when I get to the point where it's time to be asking these questions, if I'm trying to start a new relationship with someone who's going to help guide me at that point versus have already had a cadence, they already know my books, we might have been a little bit status quo, but when that
Mhm.
opportunity arises, we already have a relationship. It's already somebody I trust. That that is really what I'm hearing is where the real value comes is when those opportunities are, we can strike at them rather than go find some financial help that hopefully has some merit before I jump on it.
Yeah, a bank's going to value that if you've got a plan already before you go to them, especially if you have some established track record of making predictions and actually hitting them. Um, that's helpful, even in an acquisition situation. If you're going to sell your company, somebody, the acquirer, right, the first thing they want to know is what kind of profits can we expect to get out of this company after we purchase it, because they're going to have to increase them to get a return, right? So
Yes.
if you, hey, look, we've been managing against these plans for 2 years now. And here we are hitting our marks against it. And here's what it says we're going to do in the next 2 years. That's that makes it a lot harder to haircut the offer once they do the due diligence on you.
Fair. Okay. Well, this has been a very interesting conversation.
Good.
There's so much more to it than just making sure we're getting paid for the invoices we send out, right? And I think that's very important for all of us to keep in mind, because I do think that as entrepreneurs, we often think about things in terms of the revenue I'd need to justify this thing, but that's not even the right metric. And so having a partner like Series Next is hugely valuable. Thank you for your time. And if people want to contact you about the prospect of working together, being on a podcast, speaking for a group, how would you like them to contact you, John?
Sure. Two ways. One is LinkedIn is always easy. I try to make it easy to find myself on LinkedIn through Series Next Solutions page, or just finding me. And the other is just email me, john.marshall@seriesnextsolutions.com. And once you've finally finished typing that and gotten a glass of water, we can talk.
Great. Well, thank you for your time. Everybody, thank you for being here. If you'd like to talk to me about right people, right seat issues, engagement issues, or making sure you have role clarity for any people on your team that you think are struggling, I'm at Activate Human Capital Group, and Activate HCG is our website, activatehcg.com. And I hope you will join us, John, for another episode of You Got People Problems in the future.
Would love to.
All right. Sounds good. Thanks, y'all. Well, that's a wrap on this episode of You've Got People Problems. If you got something out of the conversation, make sure to subscribe, leave us a review, and share it with the other leaders in your network, because let's face it, we all have people problems. You can watch full episodes on YouTube or listen on your favorite podcast app. But either way, thanks for listening, and we'll see you next time.